All right, good morning. Welcome back here to Trader Money. Great to have you aboard. Hope you had a fantastic weekend. Market's getting off here this week to a slightly higher start. It's basically where it was 2 hours before the close on Friday. And we saw a sell come in Friday afternoon. And, then futures opened up last night, gained a little, and have kind of climbed back up to this level where they've spent pretty much all night. Futures pretty much hung out at this level all night. And, one of those things that, we do see on occasion, and one of those things that, it oftentimes tells you the markets are looking more towards overseas markets, Europe, China, Asia, for any direction, and not so much here in the U.S. U.S. markets are highly differential here today, right? We do see the market up, but even if you look at my board over here, right, which just has a handful of stocks, there's a pretty good mix between red and green here. And if we come in and just pull something like the advance versus decline ratio, you can see there's only about 700 more advancers than decliners. So we're not talking about a big number here. You may also note that while the market was down 11 points on Friday, there were only 200 more decliners than advancers. So we're not seeing, we're seeing a highly differential market, which tends to be bullish, even on days where there are pullbacks. And, that is continuing on, here this morning. With the markets, we're seeing commodities pull back, oil down about $1. We see gold down about $7, so we're seeing a little pullback action in both of those commodities, and that is affecting, the energy sector, for example, there, gold mining sector. Healthcare was down initially. We saw kind of an initial sell come into healthcare this morning, but it's snapping on back. And then the leader here today is what? Well, it's what it's been. It's tech. It's the Adobes. It's the Alibabas, the Apples, Microsofts of the world. Microsoft not as much today, but Micron, picking it up here today. Netflix up about $6. Amazon, was up about 10, now up about 4. So that tech strength continuing out there in the market. And then some of the retail weaknesses out there, the Walmarts, the Home Depots of the world, in a weaker position. We're seeing the banks kind of chill on out, Target pull on back. So it's one of those that, where we are seeing, that rotation. Not a lot of upgrades, downgrades out there. We did see kind of an earnings downgrade for IBM that's weighing heavily on the stock here today. Basically, an analyst said, their estimates are too high going into this year, and thinks that those estimates are liable to come down as the year progresses. So market's dealing with some things, but just not a lot, right? It's looking ahead towards earnings. We do have the signing of the initial trade deal between the U.S. and China that will happen here on Wednesday, and then the Iranian-U.S. situation seems to have kind of simmered down a little bit. Looks like there's some riots going on in Iran over the downed aircraft, and that whole fiasco, which is, if you followed that at all, it really doesn't have a lot of market importance. But from a geopolitical standpoint, which does ultimately affect the markets, a very interesting situation and the reactions there to it, extremely curious. So anyway, that's what we have going on. Now, for the challenge here this morning, no new signals on the board. We have a few crossovers. Let me show them to you. FCX on the upside. Now, if you'll remember, FCX was on the downside a lot last week, where it'd have a couple downside crossovers, and then would snap back, downside crossover. Today has upside crossover, but consolidation risk on it is very high, so chances of triggering bullish are better than triggering bearish, but they're still pretty small there. And then on the downside, we have two energy names, Conoco and EOG, and then AT&T here. And this is a stock that I've traded a few times here last week, and one that had a nice little breakout and is failing on that breakout. We'll see how far it goes, but one that isn't very close to setting a trigger here for the challenge. The consolidation risk on it is very high. So, there are some things on the watch list that could trigger here at any moment. We've had a nice pace of triggers, right? We've had a good pace of entry triggers come in for the challenge so far, but only 2 trades simply because of option values there. But we'll be looking to react to the next one and go. Okay. Now, I thought this morning, this video, I share a few of my personal market thoughts as I've been asked a couple times, and you hear me a lot of times when it comes to sharing thoughts on the market. You hear me kind of refer to the metrics, and hey, this is what the metrics are, so these are my thoughts. And for the most part, that's absolutely true. Right? It's one of those things where I can think whatever I want, right? Does it really matter all that much? No, right? What do the metrics say? The numbers of the metrics are, significantly better than, anyone's kind of personal opinion at any given period of time. Personal opinions, sometimes they're right, sometimes they're wrong. Metrics, they're typically right. They show what's happening, and some people get irritated with metrics because they think, well, the metrics need to be predictive. But the metrics show what's happening in the market right here, right now. And if we go to something like the bullish percent index, we talked about this last week, is kind of hitting this very high level that historically we will see the market kind of top out around these levels. But sometimes that could take 2, 3, 4 months, and we see the bullish percent index continuing to climb. 100 is as high as it can go, and historically it doesn't get much higher than this. In fact, if we pull up a monthly chart here and clear all our indicators, I'll show you what it looks like. But let's just take our log scale off here as well. But you can see that, yes, in the past it has gotten above 82, but did that in 2017 and did that back here in 2012, 13, and 14 when we would see a few bigger swings in the overall markets. But, it's in a pretty high level. Now, the last time it was this high was back at the end of 2017, beginning of 2018. And you can see it dropped significantly here. If we look at what the market did during that period of time, we did see a pretty sizable market pullback come in here to it. And in fact, if we go and we look at the market over the last few years, you can see that Januaries have started off pretty, that January started off pretty decent, and then a pretty sharp pullback, right? Last year, January was going into an oversold condition, and we saw it, start off with a pretty nice rally and continue on higher there. So, how does this play out? I don't think we can look at any time period and say, well, this is the pattern, and, chances are really good it follows that pattern, right? But the metrics are continue to be bullish, and so, I look at the market with a general bullish eye, but I do have some concerns, right? And my biggest concern, comes down to the wall of worry. Now, as far as any of this, being into the challenge, none of it. None of it has anything to do with the challenge. But when I look at the market personally and how I'm setting up personally and everything else, I have a sizable cash position. And, I do have some positions on the board and things that I'm not going to take off, right? Some things like a Chipotle, a Starbucks. I have a little bit of Netflix now, but not a ton. I'd like some more. I have a little bit of gold. I would like some more, but I need a pullback. And so it's one of those where, I will add to things or I will put some money into play. but I do have a sizable cash position. And for me, it's one of those where the metrics say, hey, be long, be strong, go. And I get that, right? I get that. But the reason I have a higher cash position comes down to the wall of worry. And right now, my biggest concern for the market is the market doesn't have a wall of worry. Simply doesn't. Right? You think about the worry points for the market. U.S.-China trade deal, it's gone. This rally that we have seen in the market October, November, December has scaled the market's walls of worry. It has scaled the economic data erosion. It has scaled the worries over the U.S. and China, right? And a lot of those things are kind of gone, right? You don't really hear a lot about it. Nobody's all that, fussed about it all. There isn't that, worry point out there. We got a little bit of wall of worry that helped to push the markets to this next level when it came to the U.S.-Iranian situation. And, most of the time when you look at markets and markets that rally, they're rallying on a wall of worry. It's not something where everyone's just, all in anything and everything all the time. It's one of those where there are some issues, and those issues are being used to be bought and, scale and climb those worries. But right now, market doesn't have much of one. It just simply doesn't. It doesn't have this huge wall of worry where you go, well, this is a big issue that's confronting the market. In fact, you look at most analysts going into this year. In fact, we even saw it from Goldman Sachs this morning. They're very bullish on this year. Others are calling for a pullback this year, but ultimately to go higher. It's a heavy consensus of upside, further upside this year, and it could easily happen, right? But there's not this big worry point. And historically, when we're in markets where there's no real wall of worry, we get a pretty hefty shot to the downside that comes in hard and comes in very fast. So far, there's no signs that it's here, right? It's one of those where, the last big, hard, fast shot down that we saw was back here in 2018, where the market kind of scaled, lost its wall of worry, nothing really to worry about, then just boom, that hefty hard shot lower, in the markets. And I feel like we're in a similar position in terms of the wall of worry right now, where there's just not a lot to worry about. Right? There's not a lot of fear out there in the markets. We have investors, willing and able and going out and buying anything and everything. The differentiation from the fund managers is still pretty strong. But when it comes to, even levels on the MACD, you look at it up here at the 10 level, we're getting to extreme levels. Money flow index above 80. We're getting to extreme levels. None of these levels are levels there where we say, a pullback has to happen right here, right now. Okay? But when we look across the board at a lot of the different metrics, in terms of where they sit, are they high, low, there's not a lot of upside left in most of the metrics. There's not a lot of wall of worry left here in the market. And so to me, that makes the market susceptible. Right? Makes it susceptible to a very strong pullback, to the tune of 5, 7, 10%, right? It would need a catalyst, and I made the comment last week that I do think if there is a pullback, it's going to be fairly obvious that it's on, right? And an 11-point Friday afternoon pullback is not a fairly obvious that it's on. We will see a day where almost every stock goes down. And if you're, looking to say, well, what's the obvious sign it's on? Take a look at the NYAD. This is the advanced decline ratio that I showed earlier. Friday, it was at minus 200. That's pitiful, right? And when we see a heavy shot down, we're going to see a day where there are more than 2,000 to 2,400 stocks in the market that trade in the red on a day. And that's going to be a sign, okay, you know what? There's the likelihood of some significant downside is very high. But none of that's there, right? So I can sit here and I can be concerned about what I'm seeing, right? I can be concerned that, hey, you know what? We don't have a wall of worry. We're overbought on a lot of different things. We're this, that, and the other. But that's all it is. There's no confirmation that something here to the downside. So what do? Right? Well, I do the same thing I did last month. Right? I go out and I buy a SPY put spread. Right? I go out, buy a SPY put spread, and I get out of the money. Now, I did this here for December. I bought a SPY put spread down here near the 200-day moving average that if it falls, I will make bank. If it doesn't, I'm not losing a lot. Right? I'm only putting a little bit in, and I have a similar position on right now, where if the market falls hard here over the next 3 to 4 weeks, I'm going to make very good money on that SPY put spread. If it doesn't, okay, I'm not too worried about it. Right? I lose that cash, and so what? And I know that type of thing is not for every trader. Some people absolutely hate that kind of thing. But I look at it as I have huge reward potential, so I can be wrong 5, 6, 7 times, and then be right once, and boom, it makes it all back and then some. Right? So that's how I look at it, and that's how I'm positioned. Right? I don't have big bad bearish bets on Apple and all that kind of stuff. No, I have a SPY spread that, hey, if it happens so fast that I miss it, boom, I'm not missing it, right? But I do have some hefty cash because I'm concerned it does come, and I do have some hefty cash so that I can play it when the signs are there. And so far, they simply aren't, right? They simply aren't. So I stay on some of my upsides. I manage how I've talked about, and go, right? And if things change, if that comes in, well, I will look to react. What do I think about my opinion on the market? I think less of my opinion on the market than I do on the metrics, right? It's not something where I look at my opinion on the market and go, well, just some super guru that knows every move of the market that's coming. No, but my instincts say, hey, things are in a very, very kind of low wall of worry position. And there's a good shot that we see some further downside, in the near future. But again, no signs of that here just yet. Now, the way the market is shaping up right here, I do think this is kind of an interesting spot. But there is a strong bullish argument that can be made around the Dow Jones Industrial Average. The Dow Jones Industrial Average is almost to 30,000. Now, I'm not a big believer in big round numbers, meaning I don't believe that you can look at the S&P and go, well, this is the level and this is the level because they're round numbers. But new round numbers that haven't been hit before or haven't been hit in a very long time, they tend to get chased. You tend to see market participants want to hit it. The Dow 30,000 is one of those numbers that's starting to get it close. Starting to get close enough for investors to taste it. Close enough to, for investors to chase it. Do we see that chase? I think there's a decent chance that we do. I think that's one of the more bullish arguments, that can be made from a, just pure, which way is the next short-term direction out there on the market. But ultimately, earnings season will have a big say in this. And when you look at how things are set up going to this earnings season, stocks have a little bit of higher valuation than they have had before. But some of the comparables for a lot of big names out there are very easy. And that tends to favor the bulls. So it's one of those where I think it's going to be a very important earnings season. It always is. This January, February earnings season is always a very important one. So I'm not really saying anything dramatic there, but it's one that if we see some weakening of earnings estimates going forward or revenue estimates going forward, that would be a big catalyst, for some downside in the market. But again, that's phrased with the word if. And when it comes to the bears, that's what the bears have. The bears have ifs. The bulls have the momentum. The bulls have the arguments. The bears have the ifs. And until that changes, I don't think it's all that valuable to be a grizzly bear out there. But it doesn't mean there aren't individual stocks you can't look to trade, take advantage of, and things like that. We've talked about a few of them, and things like that. We talked about Caterpillar last week, on the uptick, and a decent little short level for it, and it's pulled on back a little bit. But you'll notice it's not this big bad bearish trend that has come in. It's a small pullback, and that's what the Bears are trying to. That's about as good as it gets for the Bears right here, right now. All right. So hopefully that that helps and gives you some insight there. That doesn't say much about the challenge because the challenge is algorithmic driven. My thoughts, opinions don't really much matter for it. We get an upside trigger, I'm trading to the upside. We get a downside trigger, I'm trading it to the downside. But the algorithm has been tweaked for this challenge to give more downside signals. Should we see it come in? They're not going to be as tight. But so far, we haven't seen any come in. And until we do, I won't be able to play those. All right. Thanks for hopping on. Have yourselves a fantastic day. I'll be back on with you here this afternoon. We'll talk to you then. Take care.